Okay, let's continue. But first, we'll revise section 6, subsection 1, that is basic condition. If a person satisfy either of a basic condition, he will be considered as resident, stay in India in previous year for 182 days or more, or stay in India in previous year for 60 days or more, and stay in India for 365 days or more during the 4 immediate preceding previous year of the relevant previous year. This is the cumulative condition. Okay, exception to section 6 subsection 1 basic condition. If the following is the case, then only first basic condition will be applicable, that is stay in India for 182 days or more. Indian citizen leaves India in the previous year for the purpose of employment outside India, or Indian citizen leaves India as a crew member of Indian ship, or Indian citizen or a person of Indian origin comes to India in previous year for the purpose of the visit. So Indian citizen leaves India as a crew member of Indian ship has a note. Okay, we'll see it. But first let's read it. Person of Indian origin means who himself or parents or grandparents are born in undivided India. Undivided India is equal to India plus Pakistan plus Bangladesh. Okay. Note, stay in India means stay in territorial water also, that is up to 12 nautical miles in sea from the coast. For the purpose of calculating the number of days stayed in India, it includes the date of departure and also the date of arrival. In case of an Indian citizen who leaves India as a crew member of the ship, how to calculate the period of stay in India? Number of days stayed in India is equal to 366 days minus number of days stayed outside India as per continuous discharge certificate, including joining and signing of dates. Okay. So now let's move on to section 6 subsection 6, that is additional condition. This is for individual again. If the person satisfy both the additional condition, both the additional means these two condition should be fulfilled cumulatively. Okay, this should be fulfilled how? Cumulatively. If a person satisfy both the additional condition, then he will become ROR, otherwise RNOR. What does ROR means? ROR means resident ordinary resident, otherwise resident non-ordinary resident. Why is this section 6 subsection 6 is determined? This is determined for the scope of income. So see, this is a chart. Okay, residential status of an individual. First we have to determine whether he is resident or non-resident. It will be determined as per section 6 subsection 1. Okay, if section 6 subsection 1 is satisfied, then he is resident. If it is not satisfied, he is non-resident. Okay, if section 6 subsection 1 is satisfied, then we'll move on to section 6 subsection 6 for the scope of total income. There, if section 6 subsection 6 is satisfied, then such resident will be resident. Okay, they will be resident, but there are two types: resident ordinary resident, okay, ordinary resident, or resident non-ordinary resident. Okay, so how to identify whether a resident is a resident ordinary resident or resident non-ordinary resident? If a person satisfies both the additional condition, then he will become resident ordinary resident. ROR means resident ordinary resident, otherwise resident non-ordinary resident. Resident in at least 2 years out of 10 previous year preceding to the relevant previous year. Okay, resident in at least 2 years out of 10 previous year preceding to the relevant previous year, and stay in India in last 7 previous year preceding to the relevant previous year for 730 days or more. Okay, so what does this means? What does this section means? Okay, firstly we need to find out whether the resident is resident ordinary resident or resident non-ordinary resident. This is done for the scope of total income. Okay, how to find out whether is resident ordinary resident or resident non-ordinary resident? If the SSC satisfy this two condition cumulatively, then only such resident is resident ordinary resident. Otherwise, if he does not satisfy this two condition, then he is resident or non-ordinary resident. So see, how does this particular section start? Resident in at least 2 years out of 10 previous year preceding to the relevant previous year. Resident. So firstly we need to find out whether the SSC was a resident. If we need to find out resident, we need to again go back to section 6 subsection 1. There only we know how to find out whether the SSC is resident or not. Okay, so resident in at least 2 years, resident in at least 2 years out of, that is 2 years out of 10 previous year preceding preceding to the relevant previous year. Means otherwise previous year, that is 1920, before 1920 there will be 10 preceding previous year. Out of the 10 preceding previous year, this SSC should be resident in at least 2 years out of the 10 previous year. There is a format for this. I hope you have already seen the format, because when I was teaching it was easily visible. Okay, so you know how the format looks. I'll take you to the format, don't worry. Let's finish this part first, then we'll go over there. Stay in India in last 7 previous year preceding to the relevant previous year for 730 days or more. Which means that for the previous year 1920, other than previous year 1920, the 7 previous year preceding to that 1920, if the SSC has stayed for 730 days or more, then if these both conditions are satisfied cumulatively, then only the SSC will be considered as resident, ordinary resident. Now we'll straight away see the question from study material. So this is the question, illustration 2. Let's see this. Okay. Brett Lee, I think you all may be aware of Brett Lee, an Australian cricket player, visits India for 100 days in every financial year. So he visits India for 100 days in every financial year. This has been his practice for the past 10 financial year. For how many? Past 10 financial year. Find out the residential status for the assessment year 2021, that is previous year 2019-20. So we'll move to our format. Firstly we'll write here. So if we need to find out the residential status of Mr. Bentley, firstly we need to go from section 6 subsection 1 then to section 6 subsection 6. Okay. So what is the name of the SSC? Brett Lee. Okay. Wait. Brett Lee. Okay. Age of the SSC is not given, so it's fine. Assessment year is 2020-21. Whether there are any exception to the basic condition? No. So we'll move on to section 6 subsection 1. What does the question say? Bradley as an Australian cricket player visits India for 100 days in every financial year. That means for the previous year 1920 he must have also visited for 100 days. I hope this is quite clear. So that means his stay in India in previous year is more than 60 days. So here also we'll write 100 days. And stay in India for 365 days or more during the 4 immediate preceding previous year of the relevant previous year. Okay, wait. So here we'll write 100 into 4 years, which comes to around 400 days. That means Mr. Bradley is a resident in India. I hope this is quite clear. So we arrive to our conclusion that Mr. Bradley, who is an Australian cricket player, is basically a resident in India. Now we'll move on to section 6 subsection 6, that is whether he is resident ordinary resident or resident non-ordinary resident. So I have written the additional condition here. If a person satisfies both the additional condition, then he will become resident ordinary resident, otherwise non-ordinary resident. Okay, resident in at least 2 years out of 10 previous year preceding to the relevant previous year, and stay in India in last 7 previous year preceding to the relevant previous year for 730 days or more. So previous year 1920 is not written here. So preceding to that is 18, 19, 17, 18, 16, 17, 15, 16, 14, 15, 13, 14, 12, 13, 11, 12, 10, 11, 9, 10. So this is basically 10 years, 10 previous year preceding to the relevant previous year. So we have to find out whether Mr. Bradley was a resident in at least 2 out of 10 previous year. So out of this 10, he should be at least resident in 2 previous year. Okay. So how we will calculate that? Okay. So question has said that he has visited for every year at least for 100 days. Okay. So for 18-19 also, for the previous year, if we assume that this was the previous year 18-19, in 18-19 he would have also visited for 100 days. Okay. Here the first basic condition was not getting satisfied, but the second condition got satisfied. Okay. he has satisfied second condition, and that's why he is resident. So here also in previous year 18-19 also, every year before that also, that up to 10 financial year, that means from 1920 till 10-11 he had the practice. Okay, he had the practice of visiting India for at least 100 days each year. Okay, so that means for previous year 18-19 he will be also resident in India. How come? So see here, for the previous year 18-19 he stayed in India for 100 days, stayed in previous year, that is 18-19, for 60 days or more, 100 days. Okay, for preceding year, that means this year also it will be 400 days. See, 400 days only. That means he will again be resident in 18-19. Okay, so for the previous year 18-19 also he was resident. So understand here that till financial year 10-11 he visited India 100 days in each previous year. So we'll write it here 100 days. Okay, and here from here I'll write with some other pen. So till financial year 10-11 he had visited India for 100 days, but for 9-10 he has not visited India. Okay, but there are two conditions. So this is part 1 of the condition and this is part 2 of the condition. Okay, so we are seeing whether Mr. Bradley is satisfying part 1 of the condition or not. Okay, so in previous year 18-19 he has been resident. For the previous year 17-18 whether he will be resident? Yes, he will again be resident, because for previous year preceding to the relevant previous year he has stayed in India for 400 days, and for the relevant previous year he has stayed for 100 days. That means he has satisfied the second basic condition. So out of 10 he has been resident in 2 previous year. Okay, so again we'll see whether is there any more possibility that he has stayed in India for any previous year. In 16-17 also he will be resident. How? See, preceding to the relevant previous year, that is 16-17, for previous year preceding to the previous year 16-17 are 15-16, 14-15, 13-14 and 12-13. Here also he has stayed for 400 days, and for this relevant previous year he has stayed for 100 days. That means he has satisfied the second basic condition of section 6 subsection 1. Okay, now let's see for the previous year 15-16 whether he has been satisfying basic condition 6 subsection 1 or not. So this is the relevant previous year. Relevant previous year stayed for 100 days. Okay, that is more than 60 days. And for the 4 immediate preceding previous year, that is 14-15, 13-14, 12-13 and 11-12, he has stayed for 400 days. The question says that Mr. Brightly had a practice of visiting India for the 10 financial year. So 19-20, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Up to 10-11, he had a practice of visiting India for 100 days. That means he has again satisfied this condition. Okay, so we'll write here for the previous year 15-16 also he is a resident. Okay, you don't need to give any explanation. If you just fill the figures right over here and write the answers in this format, it is sufficient enough. Okay, for the year 14-15 whether he is resident or not, we'll see. 14-15 will become the relevant previous year. Relevant previous year he stayed for 100 days. Okay, for preceding again 400 days. That means he has satisfied second basic condition. So we'll write here he is a resident. Okay, he is resident for the previous year 14-15. For the previous year 13-14 whether he is resident, we'll check. It is relevant previous year he stayed for 100 days. Relevant for preceding years, here only 300 days he has stayed. So this shows that he has not satisfied second basic condition. He has satisfied more than 60 days but not satisfied more than 365 days. That means second basic condition is not satisfied. So here we'll write non-resident. Okay, so if for the previous year 13-14 he is non-resident. For other remaining part also he will be non-resident, because the part 2 of the second condition will not any which way satisfied. If you see in the previous year 12-13 he would have stayed for 100 days, okay, but he has stayed for only 200 days. That means he has not satisfied the second condition of part 1. He has satisfied, but part 2 has not satisfied, that is more than 365 days. I hope this is quite clear to you. Okay, so this shows that here you will write yes, resident in 2 years out of 10 years. Okay, so that means first additional condition is satisfied. Now for second condition, we'll see that stay in India in last 7 previous year preceding to the relevant previous year for 730 days or more. So this is 7 years. Okay, stayed in India in last 7 previous year preceding to the relevant previous year. Relevant previous year in our question will be 1920, and this is 7 years preceding to the relevant previous year. So let's total 100 into 7 comes to 700 days. Since 730 days or more has not been fulfilled, that means Mr. Bradley has not satisfied additional condition cumulatively. Okay, so here we'll write Mr. Bradley, no, here I choose the wrong thing. Mr. Bradley is resident, non-ordinary resident, as he does not satisfy section 6 subsection 6. I hope this is quite clear. In exam, see how ICI has solved it. Okay, ICI has solved first section 6 subsection 1. Okay, then they have taken this. Any which ways it is running into more than 1.5 page. Okay, so better this is the format. It will take one complete page. Okay, if you do it in this manner, if you memorize this format, it is sufficient enough to fetch like 4 out of 5 marks or 4.5 marks out of 5. Okay, I hope you have liked the format. Okay, so for moving on to scope of income, section 5 will entirely revise residential status of an individual, section 6 subsection 1 and section 6 subsection 6. Okay, let's revise. We'll revise from the starting. When and why do we need to determine the residential status? We need to determine the residential status of an assessee for every previous year or assessment year. If the assessee is resident in India, then he will pay taxes on his world income, that is Indian plus foreign income. If the assessee is non-resident in India, then he will pay taxes on Indian income only. This is scope of total income, and we'll study it in 5 or more minutes. Okay. How is the residential status determined in India? Residential status is determined on the basis of number of stay in India and not as per citizenship. I hope you have understood what does this means right now. Okay. Section 6 subsection 1, basic condition. If a person, that is individual, satisfy either of the basic condition, he will be considered as a resident. Okay, stay in India in previous year for 182 days or more, or stay in India in previous year for 60 days or more, and stay in India for 365 days or more during the 4th preceding previous year or the relevant previous year. Exception to section 6 subsection 1 basic condition. If following is the case, then only one basic condition will be applicable. That is, the first basic condition will be applicable. That is, stay in India for 182 days or more. Indian citizen leaves India in previous year for the purpose of employment outside India. First exception is Indian citizen leaves India in previous year for the purpose of employment outside India, or Indian citizen leaves India as a crew member of Indian ship, or Indian citizen of a person of Indian origin comes to India in previous year for the purpose of visit. So this was our first exception, this was second exception, and this is third exception. Person of Indian origin means who himself or parents or grandparents are born in undivided India. Undivided India means India plus Pakistan plus Bangladesh. Basically India before partition. Okay. Note, stay in India means stay in territorial waters also, that is up to 12 nautical miles in sea from the coast. For the purpose of calculating the number of days stayed in India, include the date of departure and also the date of arrival. Okay. In case of Indian citizen who leaves India as a crew member of Indian ship, how to calculate period of stay in India? Number of days stayed in India is equal to 366 days minus number of days stayed outside India as per continuous discharge certificate, including joining and signing of date. Okay. Section 6 subsection 6 additional condition. If a person satisfies both the additional condition, then he will become resident ordinary resident, otherwise resident non-ordinary resident, resident in at least 2 years out of 10 previous year preceding to the relevant previous year, stay in India in last 7 previous year preceding to the relevant previous year for 730 days or more. Okay, this is the chart of the residential status of an individual. If individual is resident, when he is the individual resident, when he satisfied section 6 subsection 1, otherwise he becomes non-resident. Okay, if an individual is a resident, he becomes resident ordinary resident if he satisfies section 6 subsection 6. He becomes resident non-ordinary resident if he does not satisfy section 6 subsection 6. I hope this is quite clear to you all. Okay students, so now let's understand scope of income. What does scope of income means? Let's understand firstly it in layman term. Okay, understand this is our assessee. Okay, and this assessee is a resident. Okay, so if this assessee is a resident, then whatever income this assessee will earn, it will be taxable in India. I hope this is quite clear to you. So whatever income, that means his Indian income plus foreign income. I hope this is quite clear to you all. This both will be taxable in India. But if this individual is a non-resident, okay, then only his Indian income will be taxable. I hope that is quite clear to you all. Okay, that means this non-resident's foreign income will not be taxable in India. I hope this is quite clear. So whatever I have said right now, on the basis of what I am saying, on the basis of section 5 scope of income, I am saying that. So basically here a table is given. Okay, this table will help you to solve scope of income sum. Okay, so let's understand this table. Okay, so there is particulars, there is resident ordinary resident, there is resident non-ordinary resident, there is non-resident. So basically these are individuals. Okay, this individual is a resident ordinary resident, this individual is a resident non-ordinary resident, and this individual is a non-resident. I hope this is quite clear to you all. So basically this table will act as a golden rule for you all. Okay, in the format book I have given an extract. So if you can see over here, there is an extract that we need to study after understanding this table. I hope this is quite clear to you all. So before going for exam, if you see this format book's entire table, okay, then you don't need to see anything. This is sufficiently enough for your last day exam revision. I hope this is quite clear to you all. So let's understand this table first of all. Okay, what does this section 5 table talks about? Okay, so the first point under particular says that income received in India, it will be taxable to all of this individual, that is whether resident ordinary resident, whether resident non-ordinary resident, or whether non-resident. I hope this is quite clear to you all. So how to read this table? I hope you all are getting it. We have to read it in this manner: income received in India, income deemed to be received in India, income accruing or arising in India, income deemed to be accruing or arising in India. I hope this is quite clear. So let's read this point number 1 again. Income received in India or income deemed to be received in India, income accruing or arising in India, or income deemed to be accruing or arising in India, then whatever income has been received by this resident ordinary resident, or by this resident non-ordinary resident, or by this non-resident, it will be taxable in India. I hope this is quite clear to you all. So this all three people are individually different person. I hope this is quite clear to you all. But if they earn income in this form, it will be taxable to them in India. I hope this is quite clear to you all. So here there is a star. So what is this star? So let's come to the notes. What does the note says? If a salary is received by a non-resident, okay, if the salary is received by a non-resident in a non-resident extension account, that is NRE account, in Indian branch for the services rendered on a foreign going ship, then such salary income is not to be deemed to arise in India. I hope this is quite clear. So if this non-resident who is receiving a salary in this NRE account in an Indian branch, okay, for the services rendered on a foreign going ship, then the salary income received in this NRE account will not be deemed to be accruing or arising in India. That means it will not be taxable in India. If you can see, it will be not be taxable in India. I hope this is quite clear to you all. Okay, so I hope you all have understood this point number 1 under the particulars. Let's understand point number 2. What does point number 2 says? Income which accrues or arises outside India but controlled such income from India. So understand this over here. This is our individual. Okay, this individual, for example, understand that this is a non-resident first of all. Okay, this non-resident is in India. Okay, and when he is in India, he received some income in foreign. Okay, but when he received this income in foreign, he was controlling such income. Who was controlling? This non-resident was controlling this foreign income from India. So if such foreign income is controlled by non-resident from India, it will be not taxable in India. So let me give you one more example so that you can understand it in a better manner. So understand that this is our non-resident. Okay, non-resident is also having house property in India and as well as house property in foreign. Okay, so when this non-resident is in India, he gives this house property of foreign on rent. I hope this is quite clear to you all. And this rent is received by this non-resident in foreign bank. Okay, when he is renting this foreign house property, that means he is having this house property in India and he is staying in this house property in India. That means whatever this foreign rent income he has received in foreign country, but he was controlling such income from India, then such income will not be taxable in India even if it was controlled from India. I hope this is quite clear. So let's read this point number 2 again. Income which accrues or arises outside India. So basically the rent of foreign house property received in foreign bank account means income which accrues or arises outside India. I hope this is quite clear to you all. But such income was controlled from India. Okay, even if the non-resident is there and even if he is controlling such foreign income from India, okay, it does not mean it is deemed to be accruing or arising in India. I hope this is quite clear. This all explanation, whatever I gave it to you over here, I gave it in order to explain you this part. So basically, if the non-resident, okay, is having a house property in foreign, okay, and receiving a rent income from such house property of foreign in a foreign bank only, even if such a non-resident was in India and controlling such foreign income, it will not be considered to be deemed to be accruing or arising in India. That's why this point number 2 came into existence. I hope this is quite clear to you all. But if the income which accrues or arises outside India and such income is controlled from India, then in case of a resident ordinary resident and in case of a resident non-ordinary resident, it will be taxable in India. I hope this is quite clear to you. So understand that similar example only, resident ordinary resident is having a house property in foreign. I hope this is quite clear to you all, and such house property is given on rent. So whatever rent income has been received by this resident ordinary resident, even in foreign bank account, okay, it will be taxable in India. Because if there is a person who is a resident ordinary resident, or in simple words is a resident, okay, his global income will be taxable in India. I hope this is quite clear to you all. I hope this is quite clear. That is what we have studied at the very start over here. If the assessee is a resident in India, then he will pay taxes on his world income, that is Indian plus foreign income. But if the assessee is a non-resident in India, then he will pay taxes on Indian income only. I hope this is quite clear to you all. So let's revise up to point number 2. Point number 1 says that income received in India or income deemed to be received in India or income accruing or arising in India or income deemed to be accruing or arising in India, it will be taxable to all these three individuals, that is resident ordinary resident, resident non-ordinary resident as well as non-resident. I hope that is quite clear to you all. There is a note for this. The note says that if a salary is received by a non-resident in a non-resident extension account, that is an NRE account in an Indian branch for the services rendered on a foreign going ship, then such salary is not deemed to be arising in India. I hope this is quite clear. So in simple word, it is not taxable in India. If you want, you can write it over here, not taxable in India. I hope this is quite clear to you all. Okay. Point number 2 says that income which accrues or arises outside India, okay, but control such income from India, then it will be taxable to resident ordinary resident as well as taxable to resident non-ordinary resident, but it will not be taxable to non-resident. I hope this is quite clear to you all. So now let's move on to point number 3. Point number 3 says that income which accrues or arises or is received outside India and such income is also controlled outside India, then it will be only taxable to resident ordinary resident, but it will not be taxable to resident non-ordinary resident as well as non-resident. I hope this is quite clear to you. If you want, you can write it over here, controlled outside India. I hope this is quite clear to you all. So let me explain you this point number 3. Understand that there is this resident ordinary resident, okay, who is having a foreign income, okay, and such foreign income is controlled outside India, okay. Since he is a resident ordinary resident, his world income will be taxable in India. I hope this is quite clear to you all, okay. But understand this specifically for resident non-ordinary resident. Understand that if this resident non-ordinary resident is earning an income outside India, okay, and he is controlling such income outside India only, then whatever income he has earned outside India and he has controlled it outside India, it will be not taxable in India. I hope this is quite clear to you all. And for non-resident, it is quite simple. If the non-resident is earning income outside India as well as he has controlled the income outside India, this is controlled and this is earned, okay, then it will be not taxable in India. I hope this is quite clear to you all. So our section 5, scope of income, this table is complete, okay. So now let's come into the format book. So I'll request you all, you do not open the format book right now, you open only this table right now, okay, because whatever we will read it over here, you have to understand it, why I have written taxable or non-taxable with the help of this table. I hope this is quite clear to you all. So let's come into the format book. So you don't come into the format book, I am only in the format book. You just see in your screens whatever I am reading, okay. This is the format of computation of total income if a person is resident ordinary resident, resident non-ordinary resident or a non-resident in India. So this kind of a sum is there in the study material. You can see it over there. We will not solve that sums because we are already reading this format, okay. So first particular is, or first income is capital gain on sale of shares of Indian company but money received in a foreign country. So basically capital gain on sale of shares of Indian company. So basically this capital gain is an income, okay, and this income is accruing and arising in India, okay. Even if the capital gain is received in foreign country, it will be taxable to all these three individuals. I hope this is quite clear. So basically that first point that we have studied falls under this category, that is income accruing or arising in India. I hope this is quite clear to you all, okay. The second income is capital gain on sale of shares of a foreign company but money received in a foreign company. So this simply means that this point number 3, income which accrues or arises or received outside India. Okay, so if a person is earning a capital gain on sale of a foreign company shares, okay, that means this will accrue outside India and the money is also received outside India. So then it will be taxable only to the resident ordinary resident, but it will not be taxable to resident non-ordinary resident as well as for non-resident. I hope this is quite clear to you all. Okay, so let's move on to point number 3. Point number 3 says that capital gain income on sale of the shares of an Indian company but money received in India. It is very simple. The income is also accruing and arising in India and the money is also received in India. I hope this is quite clear. So it will be simply taxable to all these three individuals, that is resident ordinary resident, resident non-ordinary resident as well as for non-resident. I hope this is quite clear. So let's move on to fourth income. Dividend received from a foreign company in a foreign country. So again this falls under this only, that is income which accrues or arises or received outside India. I hope this is quite clear to you. So it will be taxable to only resident ordinary resident and it will be non-taxable to the resident non-ordinary resident as well as to the non-resident. I hope this is quite clear. Okay, so now let's understand point number 5. Point number 5 says that dividend received from a foreign company in India. So basically what does this says? Dividend is received from a foreign company in India. So basically it falls over here. Income received in India. I hope this is quite clear to you all. Income received in India, because you can read it over here in this income. Dividend is received from a foreign company but it is received in India. So it will be taxable to all these three individuals. I hope this is quite clear to you all. So now let's move on to point number 6. Okay. Point number 6 says that dividend received from an Indian company in India or outside India. Okay, so it does not matter it is received in India or received outside India, it will be taxable to all these three individuals. Okay, so what I have written in this bracket, let's read that. Taxable if dividend is more than rupees 10 lakhs and exemption under section 10 subsection 34 is available to all. Okay, so what is this? We will understand this when we will be studying income from capital gain chapter. So we'll not stress it right now over here. Okay, so let's read this point number 6 again. Dividend received from an Indian company. So it simply means that income deemed to be accruing or arising in India. If a dividend is received from an Indian company, whether it is received in India or outside India, it does not matter. It will be taxable to all these three individuals. I hope this is quite clear to you all. Okay, so now let's understand point number 7. Point number 7 says that agriculture income from a land in India is exempt under section 10 subsection 1. So basically understand that if an assessee, okay, whether a resident ordinary resident or a resident non-ordinary resident or a non-resident, okay, earns an agriculture income from a land in India, it will be non-taxable in India. I hope this is quite clear to you. Why it will be non-taxable? Because there is an exemption available under section 10 subsection 1. So when we will be studying exemption under section 10 chapter, that time you will come to know about this. I hope this is quite clear. Let's move on to point number 8. If an agriculture income is received from a land outside India, okay, then it will be taxable to a resident ordinary resident, but it will not be taxable to a non-resident as well as to a resident non-ordinary resident. I hope this is quite clear to you all. Okay, so why I have written here non-taxable in place of resident non-ordinary resident and in place of non-resident, understand it over here. Agriculture income from a land outside India, and if the question is silent where such income has been received, we have to assume that such income has been received outside India. I hope this is quite clear. Let's revise this point number 8. Point number 8 says that agriculture income from a land outside India, and we will assume that such income has been received outside India, then it will be taxable only to resident ordinary resident and it will not be taxable to resident non-ordinary resident as well as non-resident. I hope this is quite clear to you. Let's move on to the next point. Point number 9. Point number 9 says that interest income earned in India. Okay, so if an interest income is earned in India, it means income is accruing and arising in India. I hope this is quite clear. So it will be taxable to all three types of the individual. Quite simple. Okay, let's move on to point number 10. Point number 10 says that interest income earned outside India. Okay, if it is earned outside India and it is received also outside India, then this will trigger, that is income which accrues or arises or received outside India, then it will be taxable only to resident, ordinary resident, and non-taxable to this resident, non-ordinary resident, as well as non-resident. I hope this is quite clear. So that is what is only given over here in point number 10, taxable, not taxable, not taxable. I hope this is quite clear. Let's move on to point number 11. Point number 11 says that interest income earned in India but received outside India. Okay, so basically it is earned in India and it is received outside India. So basically it is what? Income accruing and arising in India, irrespective it is received anywhere, okay, it will be taxable to all the three individual, that is resident, ordinary resident, resident, non-ordinary resident, as well as non-resident. I hope this is quite clear. Let's move on to point number 12. Point number 12 is important. It has not been covered in this table, okay, because it is completely simple thing. You don't need to understand anything over here. It is quite self-explanatory and quite logical also. Understand this, okay. So point number 12 says that income remitted to India or brought in India from foreign. So basically understand this over here. This is our non-resident, okay, and this non-resident is bringing his income or wealth which he has earned outside India, and he is bringing this income in India, okay, in India. So will this income will be taxable in India? No, because what is this table teaching us? This table is teaching us income received or income accruing or arising, or income deemed to be received or income deemed to be accruing and arising in India. That means if any income is earned in India, okay, then only it will be taxable in India. I hope this is quite clear. But in this point number 12, what is the case? Income is remitted to India or brought into India from foreign. That means it has not been earned in India, so it will not be taxable to any of the individual, that is resident, ordinary resident, or resident, non-ordinary resident, or a non-resident. I hope this is quite clear to you all. So let's move on to point number 13. Point number 13 says that rent income in India, it will be taxable to all the three individuals because it has been accruing and arising in India. I hope this is quite clear to you all. But if the rent income is outside India and it is received also outside India, so this point number 3 will get triggered, where income which accrues or arises or received outside India, then it will be only taxable to resident, non-ordinary. So it will be taxable only to the resident, ordinary resident, and it will not be taxable to resident, non-ordinary resident, as well as non-resident. I hope this is quite clear to you all. Let's move on to point number 15. Point number 15 says that rent income outside India received in India. Okay, if a rent income is earning outside India but it is received in India, that means income is accruing or arising in India, or income is received in India. I hope this is quite clear. So this will get applicable, that is it will be taxable to all the three types of the individual. I hope this is quite clear to you. So that is what is written over here, taxable to all three types of the individual, and whatever the incomes total will come, it will be further reduced by a deduction under chapter 6A, okay. So that we will study when we will be studying deduction under chapter 6A. Don't worry about that. But in order to keep this format complete for your last day revision, I have kept this deduction note over here. I hope this is quite clear to you. So here you can see working note number 1. So working note over here, that is rent income from a house property. You will understand this much better after studying income from house property. But we will understand it any which ways over here because it is easy. Okay. So understand that this is our assessee. Okay. And this assessee is a non-resident. And this assessee who is a non-resident has given his house property on rent in foreign country, and this non-resident is receiving rent income in India. So how it will be calculated? It will be calculated in a normal manner how income from house property income is been calculated, that is gross annual value, which will be further reduced by the municipal value, and then we will find out net annual value, and then we will reduce a deduction under section 24A as well as 24 subsection B, okay, and then we will find out income from house property, and whatever income from house property we will derive it over here, we will take it over here in our final calculations. I hope this is quite clear to you. Don't worry, you will any which ways understand this after studying income from house property chapter, okay. I hope this is quite clear. One more example I'll give it to you over here. Understand that this is resident, ordinary resident. He is having a house property in foreign country, okay, and such rent is received in a bank outside India. So I hope you all have understood that this resident, ordinary resident is receiving a rent income in a bank outside India. That means this resident is there. Okay, first of all, he is a resident. That means his world income will be taxable in India. I hope this is quite clear. So how it will be taxable? How this rent of house property will be taxable? It will be taxable in this manner. I hope this is quite clear to you all. Okay, so this section 5 scope of income and this table is complete, as well as the format book explanation is also complete. Okay, so let's understand this next part, that is business connection. This business connection is specifically for non-resident. I hope this is quite clear to you. So let's read what is given under this business connection. If a non-resident foreign income is having a business connection in India, it will be deemed as Indian income and hence it will be taxable. So understand that this is a non-resident, okay, and this non-resident is having a business connection in India, and due to such business connection in India, he is earning income in foreign country. Okay, that means the foreign income only. Okay, so this foreign country's income that he has been earning due to the business connection in India, it will be taxable in India. I hope this is quite clear. Following will be treated as non-resident is having a business connection in India: agent acting on behalf of a non-resident, a factory in India, a branch in India, etc. I hope this is quite clear. So just understand that this business connection is of higher importance at CA final level. At your level, they have just introduced this concept. So just understand it in this normal manner only. Do not get into this business connection in detail, because at your level there is a very less possibility that they will ask questions from this. Okay, so let's revise business connection. If a non-resident foreign income is having a business connection in India, it will be deemed as Indian income and hence it will be taxable. I hope this is quite clear. Following will be treated as non-resident is having a business connection in India: agent acting on behalf of non-resident, factory in India, or a branch in India. I hope this is quite clear to you all. Over here, what we are going to study is important at your level, that is CA/IPC. Okay, from this maximum they can ask a question in MCQ. Okay, so let's understand this. Following will not be treated as business connection in India, and no income shall be deemed to be accruing or arising in India. I hope this is quite clear to you all. So basically, if this business connection has been established, then it will simply become income deemed to be accruing and arising in India, and it will be taxable to all these three types of individuals. I hope this is quite clear to you all. And following will not be treated as business connection in India, and no income shall be deemed to be accruing or arising in India. I hope this is quite clear to you all, to the non-resident. Okay, so let's read point number 1. Point number 1 says that purchase of raw material in India for the purpose of export outside India. So understand that if a non-resident is having an agent who is acting on behalf of a non-resident and he is purchasing a raw material in India for the purpose of exporting outside India, then it will not be considered as business connection in India, because the agent, okay, this agent is purchasing the raw material and he is exporting it to a non-resident. I hope this is quite clear to you all. So whatever is the income in this process, it will not be deemed to be accrue or arise in India to the non-resident. I hope this is quite clear to you. Let's understand point number 2. Point number 2 says that collection of news material, that is a news feed, okay, a news article or a news, that is any news, any kind of news collected in India for the purpose of distribution outside India. Okay, so basically this news are collected in India, okay, and it has been distributed outside India by this non-resident's business connection in India, then it will not be treated as business connection in India, and no such income shall be deemed to be accruing or arising to the non-resident. I hope this is quite clear to you all. So let's understand point number 3. Point number 3 says that shooting of a cinematography film in India for the purpose of distribution outside India If the following conditions are satisfied, then it will not be treated as business connection in India and no income shall be deemed to be accruing or arising in India to the non-resident. I hope this is quite clear. So let's understand the conditions. Okay, the first condition says that if it is produced by an individual, he should not be an Indian citizen, then only it will not be treated as a business connection in India and no such income shall be deemed to be accruing or arising in India to the non-resident. I hope this is quite clear. Let's move on to next point. If it is produced by a partnership firm, then any of the partners should not be an Indian citizen. Okay, he should not be an Indian citizen or a resident of India. I hope this is quite clear to you. So in the residential status, we have studied that citizenship does not matter. Residential status matters. I hope this is quite clear to you. But in this point, citizenship of India as well as residentialship of India also matters. I hope this is quite clear. So if this is the case, then it will be considered as the assessee is having a business connection in India. I hope this is quite clear. But it will not be considered as having a business connection if it is produced by a partnership firm where the partners are not an Indian citizen or a resident of India. I hope this is quite clear. Let's move on to next point. If it is produced by a company, then any of the shareholders should not be an Indian citizen or a resident of India. Then only it will be treated as no business connection in India and no income shall be deemed to be accruing or arising in India. I hope this is quite clear to you all. So in simple words, if we say that if this shooting of a cinematography film in India for the purpose of distribution outside India, if it is done by these people, that means an individual who is an Indian citizen or by a partnership firm in which there is an Indian citizen or a resident person who is a partner in that partnership firm, or if it is produced by a company where the shareholders are an Indian citizen or a resident of India, then it will be considered as there is a business connection in India, okay, and the income will be considered as deemed to be accruing or arising in India. I hope this is quite clear to you all. Let's move on to point number 4. Point number 4 says that activity confined to display of a rough or an uncut diamond in a special notified zone, it will be considered as no business connection in India and no income shall be deemed to be accruing or arising to the non-resident. I hope this is quite clear to you all. Okay, so now let's move on to our next section, that is section 9 subsection 1. Income deemed to be accruing or arising in India. That means this point, income deemed to be accruing or arising in India, that means it will be taxable to all these three types of individual, that is resident ordinary resident, resident non-ordinary resident as well as non-resident. I hope this is quite clear to all. So now let's read this section, section 9 subsection 1. Income deemed to be accruing or arising in India. There are certain subsection given under this section. We don't need to remember that. We need to remember up to this subsection only, that is 9 subsection 1. I hope this is quite clear to you. If you see in the study material, there are more subsection given, okay, but we don't need to study that, okay. If you remember this much, it is sufficiently enough at your level as well as at CA final level. I hope this is quite clear. Okay students, so now let's understand point number 1. Point number 1 says that salary payable by the government of India to an Indian citizen for the services rendered outside India. Okay, so basically understand that this is government of India and government of India is paying a salary to an Indian citizen, okay, who is receiving the salary. An Indian citizen is receiving the salary. Then such salary received by this Indian citizen from the government of India will be considered as income deemed to be accruing or arising in India even if such Indian citizen is a non-resident in India. I hope this is quite clear to you all. So basically this point is getting triggered where it is said that income deemed to be accruing and arising in India, even if a non-resident is there, it will be taxable to such non-resident. I hope this is quite clear to you. So let's understand this point. Understand that this is government of India, okay, and government of India has deputed an Indian citizen in USA in Indian embassy, okay, and this government of India is paying this Indian citizen for working in this Indian embassy but in USA. That means this Indian citizen will be non-resident in India first of all, okay, and if this Indian citizen is a non-resident in India and such Indian citizen who is a non-resident in India is receiving a salary from government of India, it will be deemed to be accruing or arising in India and it will be taxable in India. I hope this is quite clear to you all. there is an exception given in the bracket which says that salary does not include perquisite and allowances as they are exempt under section 10 subsection 7. So when we will be studying the chapter known as income which do not forms part of the assessor's total income, there you will understand this, okay. But for time being, understand that salary consists of many different parts. It includes perquisites as well as allowances. If the government of India is paying perquisite as well as allowances to this Indian citizen who is a non-resident in India, okay, then whatever the perquisite and allowances have been received by this Indian citizen who has been rendering services outside India, it will be exempt under section 10 subsection 7. In simple word, it will be non-taxable to such individual, that is this Indian citizen who is rendering services outside India for receiving this perquisites and allowances. I hope this is quite clear to you all. Okay students, so now let's move on to point number 2. Point number 2 is a kind of a critical point. It runs into 3 to 4 pages, okay, in a study material. I hope this is quite clear, but I have compressed it in this 6 lines, okay. So how to read it and how to interpret this 6 lines, let's understand it. If loan taken from a non-resident, then interest on such loan payable to the non-resident will be taxable if it is utilized in India. So what does this say? If this person is an Indian, okay, and he has taken a loan from a non-resident, okay, so if a loan has been taken from a non-resident, this Indian will pay this non-resident interest, okay. And if this loan which has been taken from the non-resident by this Indian, okay, and if such loan is utilized by this Indian in India, okay, then whatever interest has been payable by this Indian to this non-resident, it will be considered as income deemed to be accruing and arising in India to this non-resident. I hope this is quite clear to you all. So let's read that again. If loan taken from non-resident, then interest on such loan payable to the non-resident will be taxable if it is utilized in India. I hope this is quite clear. So let's understand another point. If formula taken from a non-resident, then royalty payable to the non-resident will be taxable if such formula is been utilized in India. So let's understand it again. This is our Indian, okay, who has taken formula from non-resident, okay, and in return of this formula, this Indian is paying this non-resident a royalty, okay, a royalty, and this non-resident is receiving this royalty in return of this formula, and this formula is used in India. Then whatever this royalty has been received by this non-resident, it will be taxable in India. I hope this is quite clear to you all, to this non-resident, okay. If technical know-how has been taken from non-resident, then technical fees payable to non-resident will be taxable if such is utilized in India. What such? This technical know-how has been utilized in India. So firstly understand what this formula means. Formula can be any chemical formula for pharma industries, okay. Understand that there is a pharma industry and such pharma industry has taken a formula from this non-resident, okay. So in return of this formula, the pharma industry has to pay this non-resident a royalty, okay. I hope this is quite clear to you all. And what does technical know-how means? Technical know-how can be understood as a floor plan. So understand it in this manner: a blueprint of a machinery, okay. If a blueprint of a machinery has been taken from a non-resident by an Indian, okay, then on such technical know-how, a technical fees will be payable, and whatever technical fees has been received by this non-resident, it will be deemed as income deemed to be accruing or arising in India, and hence it will be taxable in this manner. I hope this is quite clear. I hope you all are understanding this table now in a better manner, okay. So I hope you all have understood this much part, okay. So here is an exception. Let's understand this exception. What does this say? However, it will not be taxable if it is used outside India. So understand it in this manner. If this is an Indian, okay, and this Indian has taken a loan from this non-resident, okay, and is paying interest on the loan to this non-resident, and such loan amount which has been taken by this Indian, okay, has been utilized outside India, then whatever interest has been paid by this Indian to this non-resident, it will not be taxable in India. In other words, the income will not be deemed to be accruing or arising in India. That means the interest income. I hope this is quite clear to you. Similarly, it goes for formula as well as for technical know-how. If such formula and technical know-how are used outside India, then the royalty or the technical fees payable to this non-resident will not be taxable in India. I hope this is quite clear. But for this point, okay, for this point itself, there is again an exception. Okay, but if government of India is paying interest on loan or a royalty or a technical fees, then the same will be taxable in India, irrespective if such loan amount or this formula taken from this non-resident or this technical know-how taken from this non-resident is utilized outside India. I hope this is quite clear to you all. So let's revise point number 2. If loan taken from non-resident, then interest on such loan payable to the non-resident will be taxable if such is utilized in India. Okay. However, it will not be taxable if it is used outside India. But if government of India is paying interest on loan, royalty, technical fees, then the same will be taxable irrespective such loan amount has been used in India or outside India. I hope this is quite clear to all. If formula taken from non-resident, then royalty payable to non-resident will be taxable if such is utilized in India. However, it will not be taxable if it is used outside India. But if government of India is paying royalty, then the same will be taxable in India, irrespective it is used in India or it is used outside India. I hope this is quite clear. If technical know-how taken from a non-resident, then the technical fees payable to the non-resident will be taxable if such is utilized in India. However, it will not be taxable if it is used outside India. That means this technical know-how has been used outside India. But if the government of India is paying technical fees, then the same will be taxable in India, irrespective it is used in India or used outside India. I hope this is quite clear to all. Point number 3. Point number 3 says that dividend paid by an Indian company outside India will be taxable in India. That is income deemed to be accruing or arising in India as per this point. I hope this is quite clear to you all. Okay. So, if a dividend is paid by an Indian company, it is simple that such income is deemed to be accruing or arising in India. There is an exemption available under section 10 subsection 34 of rupees 10 lakh is available to the both resident as well as non-resident. We will study this when we will be studying exemption under section 10 chapter. Okay, for time being only understand this much. If a dividend has been paid by an Indian company, there is an exemption available under section 10 subsection 34 of rupees 10 lakh. This is a partial exemption. I hope this is quite clear. And such exemption of rupees 10 lakh is available to both resident as well as non-resident. That means this resident as well as this non-resident. I hope this is quite clear to you all. Okay. Okay students, so now let's understand point number 4. Point number 4 was an amendment for the assessment year 2020-21, that is for your exams. Okay, so you need to pay much more attention on this point number 4 because there is a high possibility of this point to be coming in exam. Okay, money gift given by an Indian resident person. Okay, person is written, not an individual is written. Okay, Indian resident person in India. Okay, money gift has been given by an Indian resident person in India after 5th July 2019 to a non-resident individual. To whom? To a non-resident individual only, and not to resident non-ordinary resident. That means only such gift has been given to this non-resident and not to this people by a person who is a resident in India to a non-resident individual. Then such gift of income to the non-resident individual who has received it from an Indian resident person in India, it will be taxable in India. I hope this is quite clear to you all. This part is a part of income from other sources. What does this say? Section 56 subsection 2 subsection 10. Okay, this is not X, this is 10. Roman 10 will be applicable, that is up to rupees 50,000 is exempt if such non-resident individual is not a relative. What is this? You will understand any which ways in income from other sources. So stressing right now on this point is of no use. Okay, so now let's revise this point number 4. Point number 4 says that money gift given by an Indian resident person. Who is giving the gift? Indian resident person is giving the gift. To whom it has been given? It has been given to a non-resident individual only. Non-resident individual only. And where it is given? It is given in India. And at what time period it is given? It is given after a period of 5th July 2019. Then such gift of income received by this non-resident individual from this Indian resident person will be taxable in India. I hope this is quite clear to you all. So over here, our scope of income comes to an end. Okay. Okay, so now let's revise section 5, scope of income. Point number 1 says that income received in India, income deemed to be received in India, income accruing or arising in India, income deemed to be accruing or arising in India, it will be taxable to all these three types of the individual. I hope this is quite clear to you all. Then in point number 2 says that income which accrues or arises outside India but it is controlled from India, then it will be taxable to the residents only. I hope this is quite clear to us. Which all residents? Resident, ordinary resident as well as resident, non-ordinary resident. But it will not be taxable to this non-resident. I hope this is quite clear to you all. Then let's move on to point number 3. Point number 3 says that income which accrues or arises or received outside India, it will be taxable to only resident, ordinary resident, but it will not be taxable to resident, non-ordinary resident, as well as it will not be taxable to non-resident. I hope this is quite clear to you all. The note says that salary received by a non-resident, okay, salary received by this non-resident in a non-resident extension account, that is NRE account, in an Indian branch for the services rendered on a foreign going ship, then such salary income received by this non-resident in this NRE account is not deemed to be accruing or arising in India. That means it will be non-taxable. I hope this is quite clear to you all. Business connection. What does business connection means? Business connection is specifically for non-resident. Okay. If non-resident foreign income is having business connection in India, it will be deemed as Indian income and hence it will be taxable. Following will be treated as non-resident is having a business connection in India, agent acting on behalf of non-resident, factory in India or a branch in India will be considered as business connection in India. I hope this is quite clear. Following will not be treated as business connection in India and no income shall be deemed to be accruing or arising in India to the non-resident. Point number 1. Purchase of raw material in India for the purpose of export outside India will not be treated as a business connection in India. Okay. Point number 2 says that collection of news material in India for the purpose of distribution outside India will not be treated as business connection in India. I hope this is quite clear. Let's move on to point number 3. Point number 3 says that shooting of a cinematographic film in India for the purpose of distribution outside India, if the following conditions are satisfied, then only it will be considered as it is not a business connection in India. So what all are the conditions? Let's read it. If it is produced by an individual, it should not be an Indian citizen. If it is produced by a partnership firm, then any of the partners should not be an Indian citizen or a resident of India. If it is produced by a company, then any of the shareholders should not be an Indian citizen or a resident of India. I hope this is quite clear. Okay, so now let's revise point number 4. Point number 4 says that activities confined to display of a rough, uncut diamond in a special notified zone, it will be considered as no business connection in India. So understand this in a simple way. This rough and uncut diamond are displayed in a particular museum. Okay, and if the people are paying to see this rough and uncut diamond, because this rough and uncut diamonds are a masterpieces which people visit to see them. Okay, and if such people are seeing them by paying to see them, okay, whatever income has been received, it will be taxable in India. But if such rough and uncut diamonds have been displayed, that means showcased, and people are paying to see such rough and uncut diamond, okay, and such rough and uncut diamond have been displayed in a special notified zone, then whatever income has been earned from this display of rough and uncut diamond will not be deemed to be accruing or arising in India to this non-resident, and it will be considered as no business connection in India of this non-resident. I hope this is quite clear to you all. Section 9 subsection 1 says that income deemed to be accruing or arising in India. First point says that salary payable by government of India to an Indian citizen for services rendering outside India. Salary does not include perquisites and allowances as they are exempt under section 10 subsection 7. Then this will be considered as income deemed to be accruing or arising in India. Okay, so now let's revise point number 2. If loan or if formula or if technical know-how has been taken from non-resident, then interest on such loan or royalty or technical fees payable to non-resident will be taxable if such, that means this, all are utilized in India. I hope this is quite clear to you all. However, it will not be taxable if it is used outside India. But if government of India is paying interest on loan, royalty or technical fees, then the same will be taxable in India irrespective it has been used outside India. I hope this is quite clear. Okay, now let's move on to point number 3. Point number 3 says that dividend paid by an Indian company outside India will be will be considered as income deemed to be accruing or arising in India. I hope this is quite clear. There is an exemption available under section 10 subsection 34 of rupees 10 lakh, and this exemption is available to both resident and non-resident. I hope this is quite clear. Let's revise point number 4. Money gift given by an Indian resident person in India after 5th July 2019 to a non-resident individual only and not to resident non-ordinary resident, then such gift of non-resident individual who has received this gift from this Indian resident person will be taxable in India. I hope this is quite clear. And this is the part of income from other sources that says section 56 subsection 2 subsection 10 will be applicable, that is up to rupees 50,000 is exempt if such non-resident individual is not a relative. I hope this is quite clear. So our chapter comes to an end over here. Okay students, so now let's come into the format book. There is one sum that we will solve. Okay, it is already solved, but we will see that sum. Okay, so this is the question. Let's read the question. Mr. Ross is a citizen of USA. Following is a detail of his visit in India during the financial year 2019-20, that is the previous year 2019-20. Okay, 3rd May to 27th July he stayed in India. 7th August to 30th November he stayed in India. 15th December to 28th February he stayed in India. Before the financial year 2019-20, Mr. Ross never visited India. So basically we need to find out whether Mr. Ross is a resident ordinary resident or a resident non-ordinary resident or a non-resident altogether. I hope this is quite clear to you all. So the number of days stayed in India in the previous year 2019-20 is equal to 278 days. How I have calculated 278 days, that is of importance. So that's why this question is there in the format book. In the month of April, he has stayed for 0 days because he has visited India on 3rd May. Okay. So in the month of May, he has visited on 3rd May. So that means this 3rd May will also be included in the number of days of stay. I hope this is quite clear. So that means he was not in India in the month of May for 1st and 2nd May. Okay. That means from 3rd May, he was there in India up to 27th July. I hope this is quite clear. So in the month of May, he was not there in India for only 2 days. That's why he stayed in India for 29 days. In the month of June, he was there for entire 30 days. In the month of July, he was there for 27 days because he was in India from 3rd May to 27th July. I hope this is quite clear to you. So in the month of July, he stayed for 27 days. I hope this is quite clear. So Mr. Ross visited India again on 7th August, okay, and he stayed in India up to 30th November. So in other words, we can see that Mr. Ross was not there in India in the month of August from 1st August to 6th August. I hope this is quite clear. So from 7th August, he was in India. So in the month of August, what we will do is, there are 31 days in August and 6 days he was not in India. So we'll subtract that 6 days from 31 days and this 25 days will be equal to the number of days he has stayed in India. I hope this is quite clear. And for the month of September, he was there for the entire month, that is 30 days. And in the month of October, he was also there in India. Okay, so that means for the entire month he was there in India, that is 31 days. In the month of November, he left India on 30th November. So in the month of November, he stayed in India for 30 days. I hope this is quite clear. So again, Mr. Ross visited India on 15th August and he stayed in India up to 20th February. I hope this is quite clear. So we can say that in simple words that from 1st December to 14th December, Mr. Ross was not there in India. From 15th December, that is the date when he visited India, he was staying in India from 15th December to 20th February. That means how we will calculate the number of days stayed in the month of December. 31 minus 14 days will be equal to 17 days. That means 17 days he has stayed in India. I hope this is quite clear. In the month of January, he has stayed for entire 31 days. In the month of February, he has stayed for 28 days. But this month of February is of 29 days. I hope this is quite clear to you all. Okay. And in the month of March, he did not stay for any number of days. I hope this is quite clear. So basically, he has stayed in India for 278 days. Okay. And here is our format. Name of the assessee, Mr. Ross. Age of the assessee not given, so we'll put a dash. Assessment year 2020-21. Any exception for the basic condition? No. Okay. So we will write section 6 subsection 1. Okay. And here we can already see that Mr. Ross has stayed in India for 278 days. That means Mr. Ross has satisfied the first basic condition, that is stay in India in the previous year for 182 days or more. I hope this is quite clear to you. So Therefore, the status of Mr. Ross is resident as he satisfies the first basic condition of section 6 subsection 1. So that's why we don't need to see the second basic condition if this first basic condition is satisfied. I hope this is quite clear. Since it is given in the question that Mr. Ross has never visited India before the previous year 2019-20. Before financial year 2019-20, Mr. Ross never visited India. That means section 6 subsection 6, that is additional conditions, are not satisfied by Mr. Ross. I hope this is quite clear. Therefore, since Mr. Ross does not satisfy section 6 subsection 6, he is a resident, non-ordinary resident in India. I hope this is quite clear to you. So we have studied the residential status of an individual. Now let's understand the residential status of an HUF. Okay, HUF means Hindu Undivided Family. I hope you are aware of this HUF word. Okay, so if HUF is fully or partly controlled in India during relevant previous year, then HUF is resident. Okay, in our study material for HUF control, this word control, they have given a huge paragraph, but you don't need to understand what this control means at IPCC level. Just by simple understanding, you derive your simple understanding what this control means. Okay, if HUF is fully or partly controlled in India during relevant previous year, then HUF is a resident. Okay, but if HUF is fully controlled outside India during relevant previous year, then HUF is non-resident. Okay, if Karta of HUF satisfy both the additional condition, that is section 6 subsection 6, then HUF is ROR. Okay, for determining the residential status of HUF, we do not need to determine section 6 subsection 1, that is basic condition, but for determining whether HUF is resident, ordinary resident or resident, non-ordinary resident, we need to determine Karta's additional condition. Okay, if Karta of HUF satisfy both the additional condition, that means in short, Karta's basic condition we need to identify also. We don't need to identify basic condition for HUF, but Karta's basic condition we need to identify. If Karta of HUF satisfy both the additional condition as per section 6 subsection 6, then HUF is ROR. Otherwise means what? If Karta of HUF does not satisfy both the additional condition under section 6 subsection 6, then we'll write under section here. Under section, then HUF is resident, non-ordinary resident. I hope this is quite clear. This maximum can be asked in MCQ. Okay, do not worry, no major questions will be asked on the residential status of HUF. Okay, residential status of a partnership firm AOP BOI, quite simple, only this much what we have studied. Okay, see, fully / partly controlled in India during relevant previous year, then it is resident. If fully controlled outside India during relevant previous year, then it will be non-resident. Residential status of a company, this is of utmost importance at CA final level, but it has just given a glimpse in your IPCC level. I don't even think MCQ will be asked on this, because this word poem is not the literal poem. Okay, this word is an abbreviation for place of effective management. Okay, POEM means place of effective management. So it has a complete different chapter at CA final level. So here only glimpse has been given. So we'll read it and end it. Okay, residential status of a company registered in India and is an Indian domestic company, plus poem in relevant previous year is in India, then such company is resident in India, otherwise non-resident in India. I hope this is quite clear to you all. Okay, residential status and scope of income comes to an end. I would like to request to the students who are new to this channel to subscribe to this channel, and the students who are already subscribed to this channel and who are also new to this channel, kindly hit a like button to all my videos whichever you are viewing. This will help YouTube to recognize that this particular lectures are good enough, and it will push it to the maximum audience as much as possible. And I would also request you all to share the video lectures, the playlist of my video lectures, to all of your friends who are connected with this CA course. Above here you can see a mobile number besides the UPI apps. So what is this? So basically earlier when I used to teach on YouTube for free of cost, few students used to contact me and used to tell me that, sir, I want to appreciate you in a monetary terms. Please give us your account number so that we can make a monetary contribution to you. So that time I wasn't sure to give them my account details, and that time the UPI apps were also not so much in popular. So that's why they were safe or not, that was also a concern. But after this COVID and the lockdown, the UPI is being commonly used by everyone. So if you want to make a monetary contribution to me, you can make it over here. And I would also request you all, if you are making any monetary contribution to me, please send me a screenshot of that so that I can recognize who have made a monetary contribution to me, and I can appreciate them on my social media handles over here, including the YouTube, in my video lectures. And whatever the contribution you are making to this UPI number, it is at your will. There is nothing dramatic about that you have to make a contribution to me. The video lectures are completely free, as well as the notes, and the format book is also free. You can download it from the Telegram group. Just you need to do is you need to join the Telegram group, and from there you can download it. I hope you all make the full use of the video lectures and the direct tax playlist along with the notes as well as the format book, and secure an exemption in CA IPC Paper-4 Taxation. And I would like to wish you all the best for your future.